My number one largest holding as far as real estate investment trusts go, Realty Income, ticker symbol below, in my opinion, is still offering a massive potential buying opportunity for long-term investors looking to lock in nearly a 6% starting yield and a dividend that grows more or less every single quarter, not to mention massive price return potential over the next decade. Now in this video, we're going to go over Realty Income and see what it has to offer as it sits current, and I'm going to explain exactly why I still think ticker symbol below Realty Income is offering a potential once in a decade buying opportunity for long-term investors. Now, if you consider yourself a dividend growth investor, make sure to drop a like down below, stick around, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first things first, Realty Income still trading in the mid 50s as of filming this video means that Realty Income is down around 12% over the 1 year time frame. Now year to date, Realty Income is still down north of 4%. And even though Realty Income sort of recovered, and this was back in January, when some dividend investors, maybe even some of you guys, wrote the monthly paying dividend stock off for dead, since then Realty Income is still trending down more or less, offering a potential buying opportunity if again you're willing to take upon the risk. Now talking about some of the facts, looking at the entire real estate index, VNQ is basically flat over the 1 year. Year to date, VNQ is down 6.19%. Now why is this important? What am I trying to show you here? I'm trying to show you that real estate overall, even some of the highest quality real estate, has not yet recovered and or broke new highs, all during a time frame where I personally think the Federal Reserve is going to start cutting rates, maybe not next month, maybe not the next meeting after that, but sometime soon here. Now this is why I think VNQ, along with all the other high quality REITs out there, are going to break ahead and hit new 52-week range highs within the next year. Now that means that I think Realty Income during the next 1 year time frame could surpass $64 per share, and I think it's absolutely possible. But that brings me into my next point. Realty Income is offering a 5.61% forward yield as of right now, and that's a dividend that is paid monthly to investors every single month. Now, as of right now, if you buy treasury bonds or even CDs or money market accounts, I get it. You can maybe earn 4.9, maybe 5.15%, something along those lines. So a lot of investors are arguing that it's better off putting their money in a low risk or no risk environment versus buying something like ticker symbol below and hoping that the stock recovers over time. Now, although I think having a diversified portfolio made up of different bonds, treasury bonds, CDs, and of course equities is a smart idea, and that's what I currently have, I do personally think that it's a good risk reward to lock in some shares of Realty Income at say a 5.5 to 6% forward yield that, once again, like I sort of mentioned earlier, has been also growing every single quarter for several years now. Now, what I mean by this is simple. What's the downside? If Realty Income trades sideways or even down a little bit from here, let's say it even breaks below the 52-week range low, well, then you're going to be sitting on your 5.6, 5.7, 5.8% forward dividend yield and get paid dividends all along the way. And then, of course, in my opinion, as this year moves forward, if Realty Income doesn't hit new highs over the next few months, I think it has a good chance to hit new highs before the end of 2024 and beyond. Now, with that said, this is specifically going to be a play for those investors out there that do have a longer time frame ahead of them. If you're looking to swing trade this one or get out of it anytime soon, then maybe this is not the video for you. But if you're a dividend growth investor like myself that has a passion for collecting high quality assets like my 2,858 shares of Realty Income that I hold as of currently, then I think that buying some shares of ticker symbol below at around $55 per share, more or less, could be a massive opportunity. Now, Realty Income, just as of recently, did report earnings. I went through the entire earnings, and in my opinion, is pretty bullish. Realty Income also explained that right now their occupancy is still right around 98% and some change, which still makes Realty Income almost 100% leased. And keep in mind, this is no small feat. This is no small REIT. We're talking 15,450 commercial properties with 1,500 different clients making up of them. Now, some of the downsides of Realty Income as of right now, this is potentially some of the more risky aspects of this trade and or this long-term hold, which I hold a lot of shares of currently. And side note, just in efforts to be fully transparent, I sell cover calls on the majority of my Realty Income shares also, which means I do protect some of the downside. But I also hold a boatload of Realty Income fully naked, ready to ride. Now, some of the potential risks and or downsides of Realty Income is the client diversification, or more specifically, some of these clients that make up Realty Income's portfolio and make up a large portion of it. Now, not to point anyone out, but let's say Walgreens, for example. Walgreens makes up 3.4% of Realty Income's entire client, which honestly, as a Realty Income shareholder, I wish this was not the case. I wish Walgreens was much, much further down here. And this is one of the main criticisms that I think a lot of investors do have about Realty Income at this time and point. They explain that, yeah, Realty Income is doing pretty decent, they're making money, they're collecting most of their rent, and their entire portfolio is mostly occupied. But within that portfolio, there's definitely some clients that aren't the highest quality, which I would have to agree with. Now, because I do plan on holding Realty Income not for a year, not for 2 years, but for long term, and maybe even forever, I do think that over time, Realty Income's management is going to get some of these names out of the top 20 clients and going to lease out to higher quality clients as time goes on. But something to be mindful of is Realty Income sheer size, and I personally believe in diversification, not putting all your eggs in one basket. And because Realty Income has so many commercial properties that are leased and leased out to so many different clients, I think that even though there is a high concentration into certain clients that I'm not necessarily super fond of, I think they're going to be just fine long term. Now, as a shareholder, I do hope to see Realty Income's top clients be switched around over the next, say, 5 or so years, and I really hope to see some of the names within this list not in the list anymore moving forward. But all in all, I'm still very bullish on Realty Income's property type diversification. I really believe in retail real estate long term, especially when leased out to high quality clients. Like we said, maybe aren't all these names, but for the most part they are. On top of that, with Realty Income becoming a larger and larger REIT, they are being able to self-fund more and more properties and play the offense. Now lastly, this is probably my favorite part about this entire earnings. It says, as of this time, we had $4 billion of liquidity, which consists of cash and cash equivalents of $680.2 million, unsettled ATM forward, we got $62.9 million there, and $3.2 billion of availability under our $4.25 billion unsecured revolving credit facility, net of $806.5 million of borrowing on the revolving credit facility after deducting the $216 million in borrowings under our commercial paper programs. So Realty Income at this point is extremely liquid, and with the size of this REIT, they are going to continue to play in the offense, if you ask me. Now, the CEO also had some more comments. He said, given the health of our balance sheet, which was fully bolstered by a well-timed $1.25 billion bond offering back in January, we continue to emphasize that our unchanged $2.0 billion investment guidance for the year requires no external new capital. Following the closing of the Spirit merger, our annualized adjusted free cash flow of approximately $825 million is a competitive advantage that increasingly positions us to self-fund our external growth. So with the size that Realty Income is getting to at this point, they're able to self-fund their own deals, which potentially makes future deals much more profitable. Also, the CEO said underpinning the health of our balance sheet is continued stability in our high-quality portfolio. In the first quarter, occupancy remains at 98.6%. We delivered a rent recapture rate of 104.3% on properties released, and we generated same-store rental revenue growth of 0.8%. He also said we believe our diversified portfolio of investments generate consistent recurring cash flow to support dependable monthly dividends that grow over time, which is why I'm such a large holder of this stock. But now lastly, I want to hear from you guys down below. Do you personally think that Realty Income, ticker symbol below, is still offering a buying opportunity where it's trading at as of currently? Or do you think Realty Income is going to have some headwinds that's going to derail this massive REIT sometime in the future? Let me know down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.